Bloomberg Audio Studios. Podcasts, radio, news.
This is the Bloomberg Daybreak Europe podcast, available every morning on Apple, Spotify or wherever you listen. It's Monday, the 23rd of September here in London. I'm Caroline Hepker. Coming up today, Chancellor Rachel Reeves will pledge that there will be no return to austerity as the government attempts to pivot towards a more positive message on the economy. Plus, as Labour's looming tax hikes push London's super rich to look for the door, we have a special report on those making plans to leave the UK. And in other news, China pushes the button on more stimulus, cutting short-term interest rates and announcing plans for a rare briefing on the economy. Let's start with a roundup of our top stories. Chancellor Rachel Reeves will vow today that the UK's new Labour government won't return the country to austerity cuts that previous governments have seen. After weeks of warning about the dire state of the public finances, Reeves will use her speech at the Labour Party conference to dangle the prospect of higher rates of investment as the key to unlocking growth. The change in tone comes as business leaders have told Bloomberg that Labour risks scaring off investment with its negative message on tax and spending. Here is what the former Legal and General CEO Nigel Wilson told us earlier this month.
You know, we've got to get out of the doom loop. We sort of all this miserable talk that we're engaged with. We have huge investment opportunities, and we've got the money to invest. And it's just the will to invest that's not happened. And for all sorts of, random policy, random regulation and random tax changes we've made over the last 20 or 30 years, it's made it very difficult to deliver the right level of investment.
Nigel Wilson's comments come as the Chancellor's previous stark warnings of a £22 billion fiscal hole left by the Conservatives have coincided with a decline in consumer confidence across the UK. Reeves will address Labour's conference against a backdrop of criticism over cuts to pensioners' winter fuel payments and freebies from donors. Downing Street says that the Prime Minister will no longer accept gifts in future. Keir Starmer was criticised for accepting a range of freebies, including clothes. And on Sunday, his Deputy Prime Minister Angela Rayner spent much of her BBC interview defending her handling of a New Year's Eve holiday in New York, subsidised by a donor.
It was a private holiday that I think it was important that people knew, because I'd had a relationship where I'd had a donation from that individual, a substantial donation to help me towards becoming the deputy leader, because I had to run my campaign. I thought it was important that people knew that I'd used their apartment for a couple of days. I paid for the holiday myself.
Despite Angela Rayner's comments, there is no sign of the row dissipating. Meanwhile, Keir Starmer's net approval rating has slumped to minus 26, down 45 percentage points since he became Prime Minister. To another election now, though. Germany's Social Democrats have escaped another defeat to the far right in a state vote. The Chancellor's party secured a narrow victory in Brandenburg, ahead of the anti-immigrant AfD party, which took 30% of the vote, according to preliminary results. Now, the victory in a state which is home to Olaf Scholz's Potsdam constituency ends a run of disappointing results for the SPD, including this month's AfD win in Thuringia. In France, the new Prime Minister is considering taxing large firms to rein in the national debt. Speaking on French television, Michel Barnier said that a collective effort to trim spending is needed.
Our country is in a very serious situation. We're talking about perhaps 3 trillion euros of debt already and 50 billion euros of interest to pay a year. And at the same time, when you see what is happening in the country, the ministers that I have chosen to come from all over France, from France overseas, there is an enormous amount of energy, of intelligence, of initiative.
Michel Barnier speaking there through a translator. It comes at a difficult time for the new French government. Some lawmakers have said that one of their conditions to supporting the new Prime Minister is that he does not increase taxes. Meanwhile, Barnier says that France must preserve credibility on the bond markets after months of political gridlock undermined investor confidence. Bloomberg has learned that Apollo Global Management has offered to make a multi-billion-dollar investment in Intel. Under CEO Pat Gelsinger, Intel has been working on an expensive overhaul with a focus on new products, technology and outside customers. But the plan has led to a series of worsening earnings reports that have knocked tens of billions of dollars off its market cap. With more on this exclusive story, here is Bloomberg's Doug Krisner.
We are told Apollo has indicated a willingness to make an equity-like investment of as much as $5 billion. Now, nothing has been finalized. The size of the potential investment could change, and discussions could fall through. Importantly, these companies already have a relationship. In June, Intel agreed to sell Apollo a stake in a joint venture. It controls a plant in Ireland. The price tag was $11 billion. The timing is interesting since we are also told Qualcomm has floated the idea of a friendly takeover of Intel. In New York, I'm Doug Krisner, Bloomberg Radio.
Now, it is our top story this morning. It's Business Day at the Labour Party conference. It is the first annual conference in government in 15 years for Labour. The Chancellor Rachel Reeves will be speaking later, and she is expected to promise no return to the austerity cuts of previous Conservative governments. This, though, after a weekend in which the party had to deal with questions about gifts and donations, backbiting among top staff, and concerns about tax rises and cuts to come in the upcoming autumn budget. Well, we have our UK correspondent Lizzie Burden, who's in Liverpool at the Labour Party conference for us live. Lizzie, a very good morning to you. Very good to have you on the programme and roving about the country, of course. What are we expecting from Rachel Reeves' speech today, Lizzie?
Yeah, good morning from chilly Liverpool, Caroline. It's an important opportunity for the Chancellor to draw a line under that gloomy economic narrative that has been pushed all summer, which is actually denting sentiment. So you saw that plunge in consumer confidence on Friday. GfK blamed it on anticipation of a painful budget next month. And of course, that's in contrast to the Bank of England Governor Andrew Bailey, who just last week said that consumer confidence is expected to recover. And indeed, the Bank of England didn't cut rates, even though the Fed went for a 50 basis point cut, because BOE officials are that confident about UK growth and inflation's back near target. So this is a chance for Reeves to close the gap between the narrative and the economic data. And as you say, she's expected to say that Labour will not return to austerity on October the 30th, despite all her emphasis on fiscal responsibility and filling this £22 billion hole in the public finances. Instead, we're expecting her to put forward a more positive vision for the economy.
I mean, in terms of then the optimistic and positive message for the future of the economy, that's not what the Labour Party has been saying in recent weeks. So that's perhaps been the concern. Also, you know, there was a landslide election win only on the 4th of July. Now the Labour government is facing a lot of questions about the early decisions that they have made. Yeah, look, this is being billed as the biggest ever business day at Labour conference. So it's £3,000 a piece for a ticket. They sold out in 24 hours, the Labour press office tells us. But Caroline, the trouble is there are worries that Rachel Reeves is going to raise taxes on inheritance, on capital gains, on property, and drive away the wealth creators that she said only in June were the defining mission of her government. And we report, for example, that the UK hedge fund billionaire Alan Howard is considering a move to Geneva from London. You played the interview there with Nigel Wilson. And on top of that, Labour's already facing this backlash over her decision to cut the winter fuel allowance for millions of pensioners. The trade unions are trying to lodge a protest here. In fact, Unite the unions pushing for a motion on reversing the cut. And even if a vote wouldn't be binding, it would be seriously embarrassing for the Chancellor. So then, I mean, you've been up in Liverpool for a day. There were lots of events yesterday as well and over the weekend. What is the mood like in Liverpool? I would say it's apprehensive, but upbeat. As you say, this is Labour's first conference in power after 14 years of Conservative rule. There are a lot more Labour MPs here than last year, given Keir Starmer's majority. But so far, the conference has been dominated by exactly the sort of stories that Labour criticised Conservative governments for. So you mentioned it, the infighting at number 10 over the Chief of Staff, Sue Gray, her power and her pay. Also this row over freebies, the access and influence that donors won in exchange for gifts. And they
they've been dominating the UK front pages as well as the broadcast rounds, because remember, Labour won the election promising to be transparent, but now they're being accused of having been holier than thou in opposition and hypocritical in office. So Keir Starmer wants to really hit the reset button here. The slogan is change begins. Steve Reed told me it was all just a bit of gear grinding, nothing unusual for a party that's transitioning from opposition to power. And I think it's going to be really interesting to hear from the Ipsos CEO, Kelly Beaver, later about how much all of this is actually cutting through. We've already seen Keir Starmer's personal ratings plunge.
Yeah, Lizzie, it's going to be a very interesting day ahead. Thank you so much for being with me this morning. Our UK correspondent Lizzie Burden is in Liverpool for us ahead of Rachel Reeves' all-important speech Business Day at the Labour Party conference. Thank you so much for that. We'll be back with Lizzie throughout the morning, of course. Meanwhile, we want to get to some of our special reporting. Keir Starmer won this summer's election with this promise to redistribute wealth, but also to repair public services. But those plans are leading to the UK's wealthiest residents speeding up emigration plans, according to Bloomberg reporting. Joining us now is Ben Stuples, who covers ultra wealth in London. Ben, a very interesting story that you and some of your colleagues have written up. What are the most contentious Labour Party policies then, firstly, for the wealthiest people in the UK?
Good morning, Caroline. It's a very good question. What I would say is we need to roll back to when Rachel Reeves said this is the crucial where they're going to crack down on non-doms. And in their manifesto, if you might remember that back in June, they said the crucial part is they're going to remove inheritance tax breaks on offshore trusts. Now that crucially went further than what Jeremy Hunt outlined in March. And basically that means that we all hear about these non-doms. Fundamentally, it's typically high net worth individuals based in the UK. They may originally come from overseas. Now that is a tax grab that is that's the most contentious part that I would say is often coming up. We report today, as you say, it was a sort of a murmuring, a rumour going, I'm not sure if Labour can't come in, I'm not sure what I'm going to do. Well, now it's really breaking out into the open. It's all the talk, really, if you are in the private wealth community, of how many people are going. If you're in London and you're a high net worth individual, you or you know someone is going.
Well, people can threaten to leave, but are they really following through? I mean, I suppose that's the main question.
Yeah, some people have gone. Yeah, and that's what we report today. Is that we spoke to some individuals who are on the record saying, "I've been here in the UK for a while." We cite one individual called Asim Haidar. He's a Nigerian Lebanese entrepreneur. He's an ultra high net worth individual. He's estimated to us he has a 100 million property portfolio in England. But because of that policy from Labour, he has said that he's going from the UK to Greece. And here he's actually swapping one non-dom regime for another. So Greece has introduced, since we've been tinkering with our regime, other countries have been trying to introduce similar regimes that are styled on what we've done before. And actually, to be honest, Greece is one of the most attractive out there in terms of financial costs. So it's just for 100,000 euros, you can just pay that for a flat tax for as long as 15 years, and you pay no tax on your overseas income or earnings. So So while we're pulling away incentives,
others are adding them. Interesting. Very briefly, private wealth managers and now a new group that has a lot of people's attention, the Foreign Investors for Britain, are talking about this a bit more. They're obviously lobbying ahead of the budget because actually some of these decisions have not yet been made. What have they been saying?
They are going after, seeking to engage with the Treasury and HMRC, the UK Tax Authority, to make it really clear that the inheritance tax policy, for example, risks costing the government rather than raising the billions that Rachel Reeves and Keir Starmer are wanting to bring in through these policies, and others related to the non-doms regime and hiking tax on private equity investments, for example, as well. It might cost the government. We were sort of here, around, I would say, pre-Brexit, when we had Michael Gove, saying, we're fed up with experts and, all these warnings of costings. This is similar to, I would say, a Brexit for high net worth individuals. Brexit didn't change where the high net worths were based. Now these policies, non-doms and changes to private equity investments really are.
This is Bloomberg Daybreak Europe, your morning brief on the stories making news from London to Wall Street and beyond.
Look for us on your podcast feed every morning on Apple, Spotify and anywhere else you get your podcasts.
You can also listen live each morning on London DAB Radio, the Bloomberg Business app and Bloomberg.com.
Our flagship New York station is also available on your Amazon Alexa devices. Just say, Alexa, play Bloomberg 1130. I'm Caroline Hepker.
And I'm Stephen Carroll. Join us again tomorrow morning for all the news you need to start your day, right here on Bloomberg Daybreak Europe.